Welcome, guys. Welcome to another session of Market Wrap with our research head, Mr. Pankaj Pandey. Sorry, sir, वो राज भाई के साथ करते करते डेरिवेटिव हेड ही निकलता है मुझसे. Welcome, sir.
Hi, good afternoon, Gaurav.
Yes, sir. थोड़ा HDFC के नंबर्स आए मार्केट बैंक निफ्टी और मार्केट को अपने साथ तो नीचे लेके चले गया. बट आपने लास्ट टाइम कहा था कि 21,500 विल बी अ स्ट्रॉन्ग सपोर्ट. दो वी क्लोज्ड बिलो 21,500 बट 21,450 के आसपास हम गए थे, तो वो सपोर्ट लेवल के आसपास ही हम क्लोज हुए थे. तो लेट्स स्टार्ट विद निफ्टी का कमेंट्री. व्हाट इज योर टेक फॉर निफ्टी दिस वीक मूविंग इनटू रिजल्ट सीजन, बिकॉज बैंक्स के अभी कोटक बैंक का रिजल्ट बाकी है एंड प्लस आईसीआईसीआई बैंक एज वेल आफ्टर अ बिग बॉय एचडीएफसी.
So, Gaurav, this week we have seen markets correcting 900 points from the top, and so eventually we are down about 1%. But we haven't seen much of a cut in mid caps and small caps. In fact, they are eking out a small gain. Now, overall thing is that even the global sentiments have been sort of weakish because there has been a pushback in terms of interest rate cut expectation. So now you have about 56% expectation of a rate cut happening in March. I think this was quite high earlier. Now, our sense is that if you see the result season, largely market will see more of a stock specific move, and which is why I would want to sort of give a broader range, because some of the heavyweights like HDFC Bank have underperformed the market and have seen a good amount of crack. So which is why 21,000 on the lower side and 22,000 on the higher side is what one should look at in the run-up to budget. And typically, budget usually PSUs hog the limelight. So right from entire lot of PSUs to infra companies to companies having rural exposure, or even oil and gas sector, I think should relatively do better. And I think overall markets are going to remain in a consolidation mode sometime.
Yeah, I think you said 1% correction. I think I'll just correct you that I think 4 to 5% correction हम करेंगे. तो लोग बाद में आएंगे बोलने के लिए. तो 900 points would be equivalent to approximately 4% correction. Sir, हम सबसे पहले let's address the elephant in the room, that is HDFC Bank, which fell by, I've not seen a bank of that. Sorry, HDFC Bank fall by 8% when results are due. मतलब results के बाद उसने ऐसा ओवर रिएक्शन कभी दिया नहीं है. So what went wrong there, and what is your sense right now on HDFC Bank particularly and the other banking pack?
So, Gaurav, specific to HDFC Bank, one, I think it did not meet the expectation. So there was an expectation that, see, we all know that the NIMs for this bank has been lowered from 4.3 to 3.4% and percent. So the challenge is that if your deposit is not growing, then loan growth also can get impacted. And also, if you look at one way to protect margins is that you give loans to higher margin or unsecured segments.
Yeah.
But there also the RBI has increased the risk weightages. So it's a sort of a catch-22 kind of a situation that one, your deposits are not coming. You already utilized the excess liquidity of 50,000 odd crores which you had. And despite all this, there is no improvement in the NIMs. And so road to recovery in NIMs is going to be a lot more slower.
Yeah.
And obviously with a risk that the growth will sort of slow down because deposit accretion is not happening, or if that happens, it will happen at a higher pace. So something or the other is going to break either margins or the growth. So that is where I think the challenge lies for HDFC. And HDFC is known for giving consistent growth. I think this time around, that has been the sort of missing link, and which is why we have seen a big disappointment. In fact, I think FI outflow also has largely been attributed to the kind of selling which has been witnessed in HDFC Bank.
Exactly. And I think I just add one more thing here, that going forward, if we have to see some number or some metric on HDFC Bank, that has to be the NIM number and the deposit number. Because if we are expecting a rate cut this year, so NIM expansion, so there's no scope for NIM expansion for them. So they'll have, this is like a very difficult situation for HDFC, because 110% of credit to deposit ratio is not good, because in anything in higher 90s is not good, but it has breached the 100 mark. So things look very challenging coming ahead in HDFC, and that deposit number will play a very big role in deciding where this stock goes. And also it had a degrowth in EPS as well, if I'm not wrong. I think first time in the history we have seen a decline in EPS compared to previous years in HDFC Bank.
So I think road to recovery for HDFC Bank is going to be longer, and which is why I think patience is running out there.
Right.
I think but not everything is bad in the BFSI as a space, because so you look at some of the PSU banks, a Bank of India, SBI, or even the private sector, smaller banks like Karnataka Bank or South Indian Bank. I think they have a relatively low CD ratio of 65, 70 odd to 75 odd percent. So obviously, for them, room is still there to sort of keep on growing, unlike HDFC
Yeah.
Bank. So one needs to be selective. I think HDFC Bank is going to take some time. So don't expect recovery to happen in a hurry. So which is why people should sort of time out their purchases depending on their horizon.
Or it should be patient and start accumulating. And once the growth recover, like when once things get better, you may get the return for your accumulation in this time, I would say.
So my suggestion would be that wait it out for some more period of time.
Okay, great. Sir, we had one more result. I think Federal Bank, South Indian Bank, IndusInd Bank yesterday we had results. So IndusInd Bank, the stocks showed negative reaction, but what is your take on this private bank sector, this bank from the private banking sector?
So IndusInd Bank, from a price performance perspective, has done very well because their ROA had come down below
Yes.
1%. Now the expectation is that they will inch up towards 2%. Result-wise, I think overall numbers were healthy. I think except the challenge was that slippages came at a slightly higher side. So that was
Yeah.
the only sort of element of negative surprise. Otherwise, good part is that they've been able to maintain their margins at 4.29%, unlike HDFC Bank. And I think they're still sort of slightly better off in terms of valuation. So if ROA is inch up to 2% and they are still trading at 1.8,
Hmm.
so obviously there is still some more room for them to sort of do well. I think within PSUs, Bank of Maharashtra is sort of behaving like a private sector counterpart. I mean, this is
Yes.
one bank which continues to sort of deliver a very healthy set of numbers. So here also you had 20% kind of a growth in advances. Margins have actually improved to
Yes.
3.95%. So nothing much to complain in this bank, and this has been one bank which has been doing very good within the PSU as a lot, except for the valuation is also a bit rich. But that way, I think Bank of Maharashtra clearly sort of stands out. And same goes with South Indian Bank also, because South Indian Bank also overall ROAs are expected to reach closer to 1%. So there is room for valuation to sort of catch up there. Otherwise, largely the performance was sort of healthy. So that way, I think Bank of Maharashtra and South Indian Bank, in my sense, came out with quite decent set of numbers.
Absolutely. And I think I've seen Bank of Maharashtra grown from 14 rupees to 52 odd. I think it's like there's also 4x in next last 2.5 years. Sir, we have given a buy call on central bank. From our technical team has given a buy call on central bank, and we had the result as well of Central Bank of India. Did you get a chance to have a look at this result, or we'll take it in the next session?
So central bank, I haven't seen the number, but see, like I said, at this point in time, what is extremely important for banks is to have comfort on the CD ratio front.
Yeah.
HDFC Bank is 110. Even IndusInd Bank is somewhere about 87, 88 odd. But when you look at the PSU as a lot, so they're a lot more comfortable
Yeah.
there. So I think Bank of Maharashtra is at about 75%. I mean, central bank is 60%. So this is one of the lowest at the list. While no doubt this is one bank which has been struggling with asset quality for quite some long time, but I think things are on the mend. So that way, I think it has on liability is not a big challenge for them at
Yeah.
this point in time.
So can we say, can I ask you this question? So it's better to look at PSU pack rather than the private bank pack right now.
Absolutely. I think one needs to be also sort of take note that overall there is an expectation that you will see interest rate getting cut by 50 to 75 bps in India in the
Yeah.
second half. That will have implications for yield and possibly some kind of a treasury gains for PSU banks as well.
Absolutely. So, sorry, sir, one more question on banking, because banking is 35% of almost 35-40% of Nifty. If the rate cut comes in and there is a problem for these private sector bank, do you see Bank Nifty underperforming when there is a rate cut?
I think we need to sort of understand that the liquidity is also sort of tight. So all your short-term rates are on a higher side. Now our sense is that banks will start doing well when the RBI gives comfort on the liquidity front, because that is when the short-term rates will start to soften, and that might sort of ease off some of the pain for banks. And this will happen prior to rate cuts. And our sense is that so while the rate cuts are expected in the second half, post budget, we'll have to see how, in terms of RBI policy, what kind of stance they maintain. If there is a softening of their stance, then BFSI as a segment can sort of do well. So I'm not really sort of given up all the hopes on BFSI as an entire
Okay.
space.
Okay, so basically it's wait and watch and see how does the regulator, like, how does the RBI play its cards in the upcoming monetary policy committee meeting. Great. Sir, there is some news regarding Sun Pharma now. Let's move on from banking to pharma. So there's some acquisition that Sun Pharma has done. I think Taro's acquisition on that side. So what is your take on this news?
So while when you sort of see the acquisition, it largely talks about 3 times sales, kind of a valuation being given. But I think what is sort of getting missed out is that so Sun Pharma holds about 78.5% stake in Taro, and Taro used to be a very important part of that business, because at one point of time it used to contribute 20%, and now it is contributing 10%.
Hmm.
But I think what Sun is looking at is that they've got a cash pile of $1 billion, which is quite significant. And Sun is looking to sort of ramp up their specialized portfolio, and for which they need money. So our sense is that they'll be utilizing that money. And also, Taro has 50% of the sales coming from the Derma category, which is sort of facing pricing pressure. So some bit of a restructuring there is what is warranted. And that is what Sun Pharma would look to do. So they will sort of restructure the existing portfolio towards better margin products and utilize that $1 billion of cash, because $1 billion cash is quite significant for building up their specialty portfolio. So I think it's a very good move by Sun. Aside valuation, I think they are getting $1 billion excess. So I think that's a big thing.
Absolutely. I think pharma stocks have been doing really well in this lagar. So banking, pharma sector is one which was doing well yesterday as well. So, sir, any targets or something that you have in mind for Sun Pharma?
So we are working on it, and post results we will come out with.
Okay, perfect. Let's move on from pharma to IT. LTI, I think there was a weak, weak growth expectation or some outlook. The weak outlook has been given for Q4, and the recovery they're expecting would be in the first half of 25. So, what is your take on this disclosure that they have done on this commentary?
So LTI Mindtree used to command very good multiples, 26, 27 times, even higher. Growth expectation was quite high, but company came out with a growth, quarter-on-quarter growth of 0.8 odd percent. So there was a disappointment on the growth front. In fact, Q4 is also expected to be a similar kind of a growth, and hopes for recovery will happen, or is expected to happen in the second half of next financial year. Again, like most of your IT companies, North American market witnessed a decline. The Europe also declined for them. Even within vertical wise, I think except for manufacturing, so manufacturing has done well for all the players and healthcare. So I think except to these segments or verticals, I think rest of all the verticals have done well. Now, margins also have sort of declined by 60 bips because I think this quarter you had a lesser number of working days. Then I think overall sense is that the aspirational margins of say 16 to 18 odd percent or 17 to 18 odd percent is going to take some time, and which is why there was a disappointment, and we had seen a cut of 10% on the result day. Good part is that the TCV is okay, so it is strong at $1.5 billion. The pipeline is even strong, so that is the only good part. Recovery is going to take time, so our sense is
Absolutely.
that even stock also is going to take some time to recover.
Okay, so sir, IT company last Friday when we were there, I think Infosys and TCS were leading the pack. But आपने कहा था कि I'm not too bullish here because a lot of negatives were already digested there, and it's just the reaction of that. And I think we saw them coming down as well. So if I have to look at IT as a sector, will you be bullish for this year or you would still wait? I'm sorry to ask this again, but I want your thing because LT has also come out with its result.
So largely, I think most of the companies are not confident about recovery in the near term. So recovery is going to happen in the medium term. So but till the time we don't see meaningful recovery, I don't think one should just lap up the IT stock just because they have not really outperformed for past few months. And our sense is that structurally, if something magical happens because of AI-led growth, otherwise, our sense is that IT earnings are going to lag the overall Nifty earnings because overall IT
Okay.
spends are going to, or dollar revenue growth is expected to be 5 to 7% for most of the companies. You will not get the benefit of rupee depreciation of 4 to 5%, which used to
Yeah.
happen.
Right.
So your earnings probably even in a best case scenario for tier one names will grow in single digits. And that with that in perspective, it is unlikely that they'll outperform and multiples can't expand. So from that perspective, I'm still skeptical on the IT as a overall pack. But never say never if AI does
Yeah.
pushes their growth upwards. Obviously, we should look at because see, technology is one which has been in vogue for last 15, 20 odd years. It is not going to go out of fashion anytime soon.
Absolutely. So basically, IT is would be one of the laggards. Private banks would be the second laggards. So these two spaces, I think, one if one has patience and wants to look after a larger period, is okay holding these things for a longer period for 4 5 years. I think that would be perfect. If you're a momentum chaser or wants faster returns in 2 3 years, I think this is not the right time to enter this space. I would take that. So before moving to hidden gems, I'll take some questions as usual, and then we move to hidden gems. Okay. So the question is, okay, thank you, KG sir. I'm ऊपर का part I'm ignoring. Sir is asking, is KSP still good for long term?
I
KSP.
need to I
Okay.
I need to check. I have not been tracking this company.
Okay. Okay. Inder sir, HDFC Bank, we have taken that question. So Bank Nifty means only HDFC. What is your view on other big bank results and upcoming impact? That we have covered, Ankit. Bank Nifty doesn't make HDFC, but Bank Nifty is almost 40% of like HDFC is 40% of Bank Nifty. So for Bank Nifty to move, you need HDFC Bank to perform. That's very simple. Sir, any view on Tata Consumer?
So I think this is one company which we have been liking in the FMCG as an entire space, largely because when you look at, they have been, say, for example, in some of the segments like tea, the kind of premiumization they are looking to drive. While the category itself is sort of very well penetrated, and same is the case with a product category like salt.
Yeah.
But you look at the kind of premiumization this company is driving. So rock salt, typically
Right.
fetches more quite huge or realization for them.
Yeah.
So obviously it's a smaller part, but the overall premiumization is going to be good. Then I think you look at the entire Sampann range of products what they have come up
Yes.
with, and they're broadening it, and even with recent acquisition. So I think this is one company which is going to reap the maximum benefit of the overall trend or growth in the food category. So I think this is the only FMCG company that I would prefer. I think most of the other companies, my senses, are going to struggle in terms of price performance.
Looks like Tata is our best brand, our favorite brand. Tata Motors,
Uh,
Tata Powers, Tata Consumer, everything Tata.
can't help it. In fact, we have one product called One Click, specifically dedicated to Tata. So you have the entire Tata group companies there, and it's doing very well.
Absolutely. I think people who don't know about one click portfolio basket we have, where we have basket of few stocks. So this, what sir is talking about is about Tata Index, I would say Tata Index, and you can see it in our portfolio. You can see it in our smart tools section where we have one click portfolio. You guys can go there and invest. Sir, next question would be, you would love this question. Sir, your view on which sector you see leading this year and your view on L&T, Oil India and ABB.
So I think there are some sectors which we are structurally liking, not only for this year, but next 5 7 years. I think I covered that in the even at the beginning of
Yeah.
this year also. So obviously, capex is one theme which is a very broad theme. So we like the entire lot of say cement, steel, plus capital goods plus infra. So that is one. Then there are some sectors which are going to benefit from the regulations. So for example, real estate because of RERA,
Yep.
or
Yep.
banking because of IBC. And there are some pockets which are going to benefit because of energy transition.
Yeah.
So you have auto and power coming in. So I think my sense is that these are the sectors which are going to be the favorites for next 5-7 years.
So you spoke about cement. I think we have Ultratech Cement's number, Nifty 50 stock. If you had a chance of looking at it, so what can you give a commentary on the results that have been released today?
So cement companies were expected to come out with good set of numbers, and Ultratech numbers have been quite decent. So 6% kind of a volume growth. So that was on anticipated lines. Pricing growth was 2%. So
Yeah.
overall top line growth is 8%. Now the major challenge with cement companies has been the margins, and margins in the last few quarters have been recovering. And last year, Q3, they got impacted because power and fuel costs for them had sort of gone up significantly higher. Now, this time around, the power and fuel cost has declined by 18 odd percent. So, entire benefit of that has flown to the
Yeah.
EBITDA. So, Ultratech has reported one of the best EBITDA of 1190. So, cement is a good space because
Yeah.
overall housing demand looks quite good.
Yes.
60% of the demand comes there. Then I think the entire infra spend looks in fine shape. So, and then margins are recovering for most of the cement companies. I think I like the tier two names more because the valuation
Yeah.
gap is quite large between tier one and tier two. So my preference again is companies like Sagar Cement, which is valued at
Yes.
$50, whereas you look at all your big players, they are trading in excess of $200 per ton. So
As
ideally,
sorry.
So, while I like the entire space in general, but we would expect alpha creation to happen in tier two names.
That was my next question was specifically Sagar Cements because you have covered this extensively and I think it's a Shubh Nivesh pick already. And recently we have released our breakout model portfolio, something I don't remember the name exactly, a technical pay. There it is a constituent. Sagar Cement is a constituent of that portfolio. So, sir, any targets for this stock specifically?
So, if I recollect, the target price is 330 on the stock.
305 range may we had given for Shubh
Or
Nivesh.
so that is the range. I think it's at about 280 odd at this point in
Yeah.
time. And mind you, even at 305 also, the valuations are still cheap. There are a number of triggers for this stock to do well. One, I think the company acquired Andhra Cement. In that
Yeah.
process, their debt sort of increased. But they are in the process of reducing the debt. So they'll be selling some land, which is expected to come down. And then obviously, like every cement company, power and fuel impacted this company also. So that is expected to sort of soften. So,
Absolutely.
and on top of it, volume growth is going to be there because they're expanding plus both organic and inorganically. So I think this stock should do well. That is our sense.
Okay. Moving on, sir. Next question. Okay, I've taken your question, sir. Do you see, sir, are you tracking Amber Enterprises?
So we used to track Amber Enterprises. The only challenge is that so while the opportunity pie looks very large, especially when you look at whether it is the AC space or the other segment what they are into, the challenge is that it is very difficult to build confidence on the margins because while it's a high asset turnover business, but if your margins are volatile, then that is where the challenge lies, and which is why we have not been very confident in terms of recommending that stock. So I think we will still sort of watch it out more in terms of sustainability or in terms of figuring out what would be the durable margins. Then only we can take a call. But overall, EMS as a space, I think is quite good.
Absolutely. So, sir, we have taken questions. Viewers, we won't be able to take more questions because we are still waiting for our hidden gem. So, sir, and if we have missed your question, come next time, we'll answer that happily. So, sir, time for the hidden gem and please reveal it for us.
So largely, I've been recommending small caps, but of late I'm also liking large caps as well. So Coal India is what we would suggest. So here our target price is 500. The reason for liking Coal India is largely because, see, Coal India produces about 700 million tons of coal, and bulk of it is supplied to the power plants at a
Yes.
cheaper rate, which is 1.5 rupees around. And the rest is supplied in e-auction at a much higher price in the range
Yeah.
of 3 to 4 rupees per kg. Now, our sense is that the incremental production in Coal India from, say, 700 million tons to 1,000 million tons in the next 3 years, largely higher allocation will go towards e-auction, so which fetches obviously better margins and better realization. So that is one. Then I think Coal India is also sort of diversifying into, if you sort of look at, so they are also looking to explore critical minerals. They would also get into power generation with a pithead coal, because obviously they are the largest producers of coal. And mind you, the stock is valuation has scored 7% dividend yield. I think is
Yes.
a pretty good number to have. So I think sum total, this is one good stock. Ideally should do well. There was a point in time when the volume growth did not happen, but I think this time around the volume growth is in double digits. So it looks believable that they'll be able to achieve 1,000 million ton kind of a number going forward. So good valuation, attractive dividend yield, plus I think incrementally the margins will improve.
Yeah.
So that way, I think Coal India looks good to us.
So from NTPC to Coal India, I think you're just connecting the dots for everything else.
So if you recall, I mentioned that I like the entire capex as or a
Yes.
power as a theme. So all my recommendations are largely going to be from those theme only.
So going ahead into election, I think this has to be the theme. And if it's from my request, sir, this theme ka portfolio is something that can come out in one click, so it will be great for everybody to invest. So this one question I'll take because it's an interesting one. So I'm asking to recommend ETFs. So any ETF that you can recommend.
So I think I can come back, but most popular is Nifty ETF. So I think so that is the one one should look at. But if you're looking for specific provider, then I can come back in terms of, or you can sort of
Oh,
write it to me. I'll respond back, taking consultation with my MF team.
perfect. So what we'll do is we'll take it next time. मैं आपसे ETF के ऊपर question पूछ लूंगा. So sir, thank you for taking time for us again as usual on every Friday. See you next Friday and hopefully with 22,000 on the cards. Okay.
So I'm keeping my finger crossed. Thanks, Ron.
Fingers crossed, sir. Thank you so much.
Bye.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct. Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.